First-time home buyers. Yes, this video is for you, particularly in California. First-time home buyer is such a catchy phrase and is probably one of the most overused phrases in the housing market. I get asked all the time, hey Nicar, what are some of the first-time homebuyer programs out there? Well, quite frankly, being a first-time homebuyer just relaxes a few of the strict guidelines. You don't really get a special pass. Okay, so now before I talk about a couple of the programs that are out there are three things that I'd like to throw out there real quick. Number one, you still need to work on your credit, right? So you need to pay your bills on time. Don't try to pile up a whole mountain of debt. If you have collections, repossessions, or bankruptcies, really from the bank's perspective, they don't care that you're still holding a grudge against Comcast or Verizon and you owe them $300. It really shows that you didn't pay them, right? The bank doesn't care whose fault it is. And if you can't pay them $300, now this is for the bank's perspective. If you can't pay them $300, how are they supposed to trust you with 300,000? Right? So that's how they're thinking. So the more debt you have showing up on your credit report, the less money the bank will allow you to borrow for your mortgage. So yes, you're a first-time home buyer, but you still have to take care of your credit. Second thing I want to throw out there is make sure you've been at your job for at least 2 years or in the same career for 5 years. It makes the bank nervous when they see that you change jobs or careers very often. Now, if you run a business, make sure you're not writing off too many expenses on your taxes. Why? Because the banks go off your profit and your taxable income. So for example, if you made gross income of 100,000, but then you say you have 90,000 worth of expenses, well, guess what? The bank will only loan you based on $10,000 worth of profits. So plan accordingly, and I would recommend getting advice from a professional accountant or a CPA, and let them know, show them your books and say, look, I'm trying to buy a house. What would be the best way for me to increase my buying power, right? So again, just because you are a first-time home buyer doesn't mean you get a pass. Like, you still need to have stable income coming in. Third one I'd like to point out also and throw out there is you still have to save money. You're buying a house. It's a big deal. You want to make sure you have a little bit of cushion there, right? You wouldn't want to empty the bank to buy this house. And I'm going to have to agree with Dave Ramsey on this when he says that buying a house can be a gift or a curse. So the more money you save, the better off you'll be. And the more money you'll have in the bank, the more room you'll have to negotiate, the more options you'll have, and so forth. So again, I get asked all the time, how much money do I need to save? Well, that's a very personal and individualized question. So send me a message and we can chat more so we can narrow down how much money you can save, right? So really, to summarize, what I'm trying to say here is just because you're a first-time home buyer doesn't mean you can be reckless with your credit, have unstable work, and not save any money. No, you are still subject to cleaning up your finances. So again, being a first-time home buyer relaxes a few of those restrictions, but you're not excused from being financially responsible, if that makes sense. So now on to some of the first-time home buyer programs. So we have a very popular one. It's called FHA program. I'll discuss that one actually in a separate video because it takes it's going to take a whole lot of time. It's very popular. It's actually what I used on my house. 3.5% down payment, and there's mortgage insurance for the life of the loan, but what it does is it allows somebody with a lower credit score to purchase a home for less than 20% down. It's actually a great program, and yeah, so I will go ahead and cover that in a different video. So the next products are not really talked about as much as FHA loans. And these are the conventional products. So there's Home Possible, which is a Freddie Mac product, and then there's Home Ready, which is a Fannie Mae product. They're very similar, actually. And so here are the similarities. They both only require 3% down payment. 3%. They are designed for low income home buyers. You can actually go ahead and Google area median income, AMI. And if your income is less than 80% of the AMI in your area, then you qualify. Right? So the AMI varies by location. When you Google it, you'll see a chart, you'll see a map, and try to figure out where you live on that map, and they will have the figures there for you. And the cool thing here is, compared to the FHA loan, where the mortgage insurance, it's there for the life of the loan. So in order for you to get rid of that, have to refinance out of that loan. But the cool thing about the Home Possible and the Home Ready programs is when the value of your house increases and your loan to value drops below 80%, then you can ask your bank to cancel your mortgage insurance. That's pretty cool. The whole thinking behind this is, if you, as a borrower, put less than 20% down, they label you as a risky borrower because you have a high balance and you don't have enough equity in the house. But over time, if you live in an area where the houses actually appreciate, at some point, your loan to value is going to hit 20%. So you're no longer, I guess, considered a risky borrower because you have a lot more equity in your house now. So the cool thing here is you can just call your bank and say, hey, what's the value of my house? And if it's above 20%, can we take off the mortgage insurance? And they can go ahead and take it off for you. And you can also purchase multifamily, right? 1 to 4 unit or 2 to 4 unit properties. How are they different? The biggest difference at this moment, it's their credit score, pretty much. So Home Possible requires a 660 credit score, while Home Ready only requires 620. Now, if you guys want to dig deeper on what the differences are and which program it fits you more, you can go ahead and send me a message. You can email me, leave a comment, whatever. Let's go ahead and set up a time where we can talk. I also have a video phone. Shout out to Sorensen for giving me a video phone number. So to all my deaf viewers, you can text me, and then we can set up a time to video chat. So I hope this video was very helpful. And if you are a first-time home buyer, I definitely love to help you. And go ahead and tag and share this video to anybody who's thinking about buying a house, whether it's right now, 6 months from now, next year. I'd definitely love to help them, and this video might help them understand and realize that there are some options out there for first-time home buyers. So once again, my name is Nicar. I am a realtor and a loan officer, and I'm here to help.